What did you make of the Barron's piece on Nvidia? Take him saying it could be tech's next casualty, as we talked about signs of rising inventory, the price of gaming cards coming in.
A couple of years when there was an Ethereum overload where they had far more chips in the channel, the stock did have a tremendous reset. And it went down, I don't know, from 180, went down to 90. We cut our position in Nvidia for a Travel Trust. It's locked in a very big gain. I don't want to get back in it yet. Nvidia is so much more than a card situation now. It's really an industrial play. It's a play on high-performance computing. But, of course, when you have a stock that's this highly valued, everything's got to be perfect. The stock will be down. They're just selling everything. Everything. And everything's semi.
You know, it's interesting. They're not selling Snap. That stock is up.
The quarter was very good.
That stock is up. Maybe a bit of a surprise. Now, we're talking about a stock that is still down and came into the session down 49%. Over the last 12 months.
Still a $40+ billion company.
Yeah, it's got a $47+ billion market value.
No one reads the conference calls anymore because there's so much to do on when you're watching Netflix. But GQ, Vogue, Wall Street Journal, ESPN, CNN all came in. Nike has a campaign to reach the 13 to 17-year-olds. I mean, this is it's $48 billion. This is an extraordinarily good quarter. And Evan Spiegel is so grown up now. I mean, he's like regular call.
Well, you can see where the print was last night and then the immediate reversal, as they talked about basically a big pause in advertising right after Ukraine began.
Yes, but actually a Ukraine issue to me directly. But I will say, I thought that quarter was spectacular, but it doesn't matter. Because the stock's too high, it's worth too much.
What about the impact, the continued impact from Apple's changes in privacy and the inability to track
not
people?
As bad because
it wasn't as bad for them last quarter, but they seem to talk a bit more about it this quarter.
But they're trying to do things that are so like their AR.
Yeah, augmented reality
is so good.
Yeah,
their lens programs are so good that they're pivoting rather radically. And I just thought it was a very exciting call. It's just that, like with so many companies in this market, it wasn't worth what it's telling for. Hey, anyone noticed that Meta goes down every day?
I did. I said that, well, not today. It's up.
Although for the year, down 45. Along with FANG, Jim, Netflix down 64, Microsoft down 16.
I don't like FANG.
People start saying Meta's broken. I said that to you, broken.
I stopped liking FANG.
Not sure what broken means, but it's a broken stock.
I like Lulu.
You like Lulu?
Yeah.
By the way, I mean, when we look back on the corporate news this week, Netflix will probably be still chief amongst them. That is going to reverberate for a very long period of time.
This market.
Speaking about a broken stock, it is up today.
For how long?
We'll
David,
see.
It's 9:36.
Well, then, of course, it was followed by CNN Plus yesterday.
Yeah.
And adding to concerns about subscriptions and streaming, right?
You know, there's an area of the economy where there's a surfeit of employment. There's people, if you want to.
Not anymore. They're on different ends. Obviously, Netflix spending what will be as much as $20 billion on entertainment. Obviously, CNN Plus was still going to spend as much as $500 million. I said many times there was an expectation that once Zaslav took control of that company, that was not going to be something that lived for very long.
Is that
was
part
simply
of the
a lack
$3 billion?
I think there was a lack of a belief in the ability for this thing to actually garner real subscribers. And there is that question for services like CNN Plus. I mean, the numbers were so anemic, no offense to it, that how could you not but sit there and go, why are we doing this? And they're not anymore.
The heyday is over. I mean, all that stuff is over.
That stock has been under pressure.
It's a heyday for Kimberly-Clark.
Not because of CNN Plus, but because, of course, what we saw with Netflix earlier in the week. And the simple question of the profitability overall, the direct-to-consumer model, it will never fully replace, and we know this, the incredibly lucrative cable ecosystem that we've all been a part of for so long, where, 100 million people pay to watch you, but very few actually watch. That's no longer the case. And so direct-to-consumer is proving to be and will continue to most likely prove to be very expensive, and the long-term rates of return perhaps not quite the same.
No, it's not. You want to be in Kleenex. What?
Yeah, we haven't done KMB yet.
You want to be in Kleenex.
Yeah.
Kimberly-Clark.
They have pricing, double-digit organic. A lot of it's pricing. Mm-hmm. Certain things are working. Name brand products, people are premiumizing.
Right.
But they're not premiumizing anything plus when it comes to. But I was watching last night something called Tokyo Vice. I didn't know what it was on. I just said Tokyo Vice. I'm like talking into my thing, Oh, my daughter wants me.
And how was Tokyo Vice?
I don't know.
That's kind of the thing. Is like people are talking about vibe shift, in that is the buckshot strategy of content now working against them?
I think
right?
I think it absolutely is. I frankly am. I'm overwhelmed. I try to watch it, after I'm done work, and I actually prefer reading conference calls.